In spite of the news that the FDA has approved the treatment for a tough form of leukemia, SNDX has continued to show a lot of weakness within a longer term bullish trend. Yesterday, the 24th of October, lost 7.83%. Let's hear more about that.
Syndax Pharmaceuticals, SNDX, made headlines after the FDA approved Revuforj for a new use, treating relapsed or refractory AML, a tough form of leukemia, with an NPM1 mutation. That's a big deal. It's the first and only drug approved for this patient group. The approval came from the Phase 2 Augment 101 trial, which showed a 23% remission rate. And while that might not sound huge, for patients with relapsed AML, that's actually a meaningful step forward. Revuforj is now also listed in the NCCN Guidelines, which is key. That means it's officially recognized as a recommended standard of care, making it much easier for doctors to prescribe and insurers to cover. It's also worth noting this isn't Revuforj's first green light. It was already approved for leukemia with KMT2A translocation, and now Syndax just expanded its market reach with the NPM1 mutation approval. This double label gives them a strong foothold in targeted leukemia therapies, a space with very little competition. On the business side, Syndax has launched a Syndax Access program to help patients afford treatment. Smart move to support adoption early on. Now, here's where the trader buzz comes in. The stock actually trended down after the approval, likely a sell the news reaction after a run up. But the community sees this as setting up a potential double catalyst with the exadamulimab PDUFA date coming soon for chronic GVHD. Combine that with high short interest, and some traders are eyeing a possible short squeeze setup if sentiment flips bullish again. So, in short, Revuforj approval equals long term validation, next PDUFA date equals short term catalyst, and short interest equals potential fuel if momentum returns. Target, quick tick away. Syndax is no longer just a clinical stage biotech. It's a commercial oncology company with two shots on goal and growing Wall Street attention.
Yes, underlying trend is still sloping bullishly upward, so it's bullish. The extrapolation of its 3-day moving average is saying it's going to consolidate from let's see, from Tuesday the 28th. So it's actually saying that maybe lower prices may continue to print. There are downward projections here. We have 12.42, 13.05, 14.09. However, there are upper projections as well. We have 14.09. I think we mentioned that already. Yes. 16.48. Sorry. 17.2 to 17.68. Okay, so the 10 and 21 day moving averages, they are all bearish. Positions opened all the way back to 21 days ago are no longer in profit. Yeah, that's what we're looking at right now. Let's see what we have on the 4-hour chart. It would even be more magnified. Yeah, the bearish state will be magnified. Okay, here it's saying that we may have a bounce, but that is after lower prices print going all the way towards pre-market session of Monday. Okay, so by the time the market resumes on Monday the 27th, we're expected to see a bounce that is expected to remain in place up till Thursday the 30th, the pre-market session of that day. Then after that, we may have a contraction. No guarantee that that will be the case. Projections are currently saying, let's see what we have. We have 12.37, 12.90, 13.76. Yeah, and then 15.7, 16.31, 16.69. Yeah, those are the projections. Previous projections had up to 17.54 and 18.03. Yeah, the 10 and 21 period moving averages are severely bearish. Positions opened all the way back to Yeah, 800 hours ago. Yeah, no, they're all negative now. Yeah, as things stand. So let's see how it goes on Monday, the 27th. Let's see whether this is actually going to print. Yeah. Okay. So have a look. Just be on the lookout for what's going to happen, and I'll continue to update you. Thank you very much for watching this video.